Hi, I'm Jordan Hucht from Vision Wealth Partners, and today we're going to talk about Roth conversions. While most people are familiar with Roth contributions, whether it be to a Roth IRA or within a 401k plan, I believe fewer people are aware of Roth conversions and specifically when they should be considered and how they can be an effective tool in long-term financial and estate planning. So first, what is a Roth conversion? In a Roth conversion, you're essentially transferring money from a traditional IRA to a Roth IRA, and to the extent that the traditional IRA assets are pre-tax, the conversion will be reported as income in the current year. In essence, you're choosing to pay income tax now on the assets in exchange for tax-free withdrawals in the future. The obvious question now becomes, when does it make sense to consider a Roth conversion? There are several factors that come into play here: tax rates, time horizon, and estate planning. Let's take them one by one. First, tax rates. The overarching goal in the Roth versus pre-tax decision is to have the most money after taxes are paid. So, in a situation where you expect your tax bracket in the future to be meaningfully higher than your tax bracket now, a Roth conversion could make sense. In practice, this happens in a few common situations. One such situation occurs with younger investors who are early in their careers and are on the lower end of the tax scale. In this case, it can often make sense to pay tax now at a relatively low rate and then have tax-free retirement withdrawals when they expect their taxable income to be much higher. Another situation, and one that we see quite often, is those who are retiring with a substantial amount of pre-tax retirement assets and will have a gap in time between retirement and when they begin receiving Social Security and then required minimum distributions. In those gap years, income may be provided from very tax-efficient sources, landing them in a low tax bracket. As a result, Roth conversions during those years can be an effective way to pay a low tax rate on IRA assets, as well as reduce required minimum distributions in the future. One final note on tax rates. Bear in mind that this is an inexact decision because tax brackets are subject to change over time, so it's impossible to know with certainty what tax rate you'd pay 10, 20, 30 years from now. Beyond this tax rate arbitrage, another important question to ask is, how much time do these assets have to grow? You need to consider your investment time horizon because the longer the assets can grow in the Roth account, the more a conversion makes sense. Even if you think you will be in a lower tax bracket by the time you withdraw the funds, the accumulation of earnings over an extended period of time and the ability to withdraw that growth tax-free may justify paying taxes on a Roth conversion now. Lastly, from an estate planning perspective, Roth IRAs can be an extremely effective tool for wealth transfer due to two important characteristics. One, there are no required minimum distributions from Roth IRAs, meaning assets can benefit from tax deferral for the entirety of the account owner's life. And two, Roth assets that are passed to the next generation are not subject to income tax when withdrawn. Conversely, passing on pre-tax IRA assets will result in taxation of the entire account over a period of years. For these reasons, those who have accumulated pre-tax retirement assets in excess of what is projected to be needed to fund retirement may consider Roth conversions as an effective estate planning tool. As with most financial planning decisions, each investor's individual circumstances govern whether Roth conversions should be considered. But when done correctly and with proper planning, Roth conversions can be an extremely effective tool as part of a comprehensive financial plan. I hope you found this helpful. For more videos on a variety of wealth management topics, head to our YouTube channel. Thanks for watching. I'm Jordan Hucht from Vision Wealth, your dedicated wealth management partners.